Yeah.
I do know your view on that, so I'm just gonna, make you wait a tad bit because we have two more guests joining in. Probal Sen, energy analyst at ICICI Securities, and Balaji Subramaniam, the vice president at IIFL Securities, join us now to tell us how to approach the numbers and the stock, of course. Probal, let me start with you because the star of the show was undoubtedly the O2C business, and over there as well, we've seen, a good double-digit growth sequentially in the operational performance. What about the stock? What is your expectation today and overall on the numbers?
Well, I think the numbers were obviously encouraging. What we have really seen is that despite Singapore margins or theoretical Singapore margins actually declining by about $2, our sense is that GRMs for Reliance and indeed some of the other players should have actually gone up, primarily because the key product spreads of diesel, ATF, and gasoline, which make up more than 60% of their product slates, the refining product slates, have actually remained fairly strong. The benchmark margins have a lot more weightage to other products like LPG and FO and so on, which have not really done so well. So that dichotomy between, or the gap between Singapore benchmarks and Indian players' GRMs will continue to grow. I think even for the coming quarter, if the extent of Russian crude that we keep hearing in reports is actually flowing through, that should also provide an additional driver because crude costs will probably be lower. So from an earnings momentum perspective, we definitely believe that Reliance should actually continue to improve numbers for the next few quarters. Geo has shown fairly steady results. Retail continues to actually, I think, outperform estimates. The one surprise for us was the fact the price realizations in the upstream segment were also very, very strong. And with the expectation that another 10 MMSCMD of gas production should come through by the end of this financial year. So to that extent, I think, even that segment should actually start pulling its weight even more. It's interesting to look at the earnings mix for the company. The consumer businesses today now are contributing more than 50% for the last couple of quarters in their consolidated EBITDA. And OTC, despite the kind of improvement seen, is less than 40%. So that the driver continues to change, the business mix continues to change. And I think earnings growth should continue to accelerate for the company over the next couple of years.
Okay, earnings growth should accelerate for the company. Balaji Subramaniam, Vice President at IIFL Securities, is also with us. Actually, the analyst call had a lot of positive commentary coming through on how the business is expected to improve across the board, whether it's O2C gaining from strong GRMs and rising petchem spreads, or even in telecom, the focus is to fast-track the 5G rollout. But Balaji, the only niggling worry, one, is that there was no specific timeline on the tariff hike, and that is one of the reasons why the stock has also, seen a lid on its gains. And the other thing is the debt of the company has gone up about 18% sequentially compared to last quarter and now. Would that be a concern for you? And on the stock itself, what's your view?
Hi, good morning. So on the telecom, we see a steady performance. We had about 19% YOY revenue growth, but that was largely led by the tariff hikes that were taken in late 2021. I think the biggest trigger for the stock is what is going to happen on tariff hikes. My sense is that considering the significant investments that the company is making in 5G, the chairman had mentioned as part of the AGM speech that the company would be investing about 2 lakh crores in the next few years on 5G. And my sense is that most of it would be front-ended, as we are seeing that 5G rollout has been happening at a pretty rapid pace. So I would still believe that some tariff hike is probably going to happen sometime during the calendar year 2023. And, I think till that happens, the stock might probably be range bound, especially with respect to expectation on the geo front, because as you said, the investments are happening, the debt has been rising, and RIL as a company has done more than 1 lakh crores of capex in the past 9 months. So I think the clear route in terms of monetizing those investments, will be contingent upon timely tariff hikes being taken, and I think that will be the single biggest trigger for the stock.
Hey, in fact, I wanted Prakash Diwan to come in on this as well. Prakash, the capex has gone up for them almost 16% compared to last quarter. considering that there is this massive 5G rollout happening. There's also an aggressive expansion plan in the retail business. They are adding 6 million square feet over almost 800 new stores. Do you think the delay in the tariff hike and the rising interest because of the capex, do you think it could keep a lid on the gains? Because there are a lot of brokerages that have actually taken down their FY25 EPS because of the, the pressure that we're seeing on the balance sheet.
So, Sonia, yeah, it is logical that you will probably have earnings being back-ended and the capex being much more front-ended. But then we've seen what happened when they actually rolled out Jio, right? They had a massive debt of almost 185,000 crores, which they repaid, became net debt free. And the last 2 years, most of the capital is gone to to intensify and deepen the footprint on the retail side, the kind of acquisitions they made, the kind of expansion in terms of geographical footprints. Now, all of that is probably coming to a mature stage. So retail doesn't probably become capital hungry. But if you don't roll out 5G quickly and let the competition roll out, I mean, your market share that you kind of can assume with this kind of a strategy is far more superior, qualitatively and quantitatively both. And for that, you will have to roll out, incur the capital expenditure in the front-ended side. But the price hike can only come once you've got a critical mass of 5G rollouts in cities. I mean, I think it's commendable that they've already reached this number of 174 cities, and it's going to keep on expanding very rapidly, as Balaji also mentioned. So this is far more faster than what we anticipated, and the price hike will happen once that critical mass or the tipping point is done. So you'll probably see, the money coming back after the price hike from 172 ARPU if you go towards 200 quickly. Though if it's in the middle of, let's say, 23, it kind of sets off the huge debt that or the significant debt that could probably build up in that period. So I'm not too worried, but yes, the mathematical EPS growth will probably be some time away, and hence there could be an argument for a slightly lower estimate and hence a P multiple that's probably not very, very gratifying. But I think it's a great opportunity. The fast growing hydrogen business also will start seeing some numbers after a year and a half. So there's much more vectors working towards it. And that's exactly why you buy into a stock, because it offers value in the long term.
All right. Well, that's on Reliance Industries. Probal and Balaji, thanks a lot for joining in and giving us your quick take. And Prakash, I would request you to stay on.